Hi Sharon, great to have you with us. You have been CEO of Infiniti Insurance for nearly 3 years now. What changes have you seen in the industry?
We need to note that regulatory changes are probably the biggest that we've seen. And I think we will get onto that in a few minutes. But the other change that I've become very aware of is the move towards increasingly using data to underwrite, looking at where claims come from in relation to what you're insuring, and utilizing that both in terms of what you write going forward and what you charge. And as Infiniti, we haven't got into telematics, but we do use data extensively in our underwriting, and we present that data to our partners to help them to see where and what they should be underwriting and what rates to charge.
And what do you think about the numerous regulatory changes?
I do have a fear that the capping of binder fees is going to lead to exactly what happened when commission was capped many years ago, and that everyone will simply be paid the maximum. I feel for brokers, with the capping of binder fees plus talk of having commission lower than what it currently is, brokers are going to struggle. They are used to providing a level of service. They've geared up to provide that level of service to their clients. And they are, after all, in the forefront of insurance and the face of insurance to clients. We need to remember that rates are based on what insurance companies see as how much profit they need to make. It's based on claims experience. But your broker receives a set amount of gross written premium. And because rates in real terms have not increased significantly, in fact, in the last 20 or 30 years, you can still write fire rates at the same rate they were being written at 20 years ago. And so your broker commission has not increased, but the expenses have. And I'm concerned that in squeezing the brokers financially, the service levels to clients are going to drop, and there'll be even less expertise in the insurance industry.
Well, we know we're in for some stormy weather. What does your 2016 look like?
I think we are. We've had a difficult couple of years in the industry with catastrophe claims and various other things. We're anticipating the cost of motor repairs going up between 17 and 22.5% this year. That's largely because of the devaluation of the rand against the dollar and a lot of the parts being dollar-based costing. That is going to make it difficult. If you add to that the economy in South Africa is not the best it has ever been, and there's talk of rating agencies wanting to downgrade the country possibly further, we're close to junk status, that means that the man in the street generally doesn't have terribly much money.
You are known to seek and attract talent. How do you keep your stable of employees happy?
Attracting talent is always important. You know, if you don't have talented and good staff, then you're not going to attract talented and good partners, because our partners are used to a certain level of service and they want to deal with talented people. We look very carefully before we employ people. I remember one appointment in particular, I think took me a year to find someone. What is also important is that you give those staff the flexibility to do their jobs, and that you acknowledge that you will from time to time make mistakes. And if you do make a mistake in someone you've employed, if you're not happy with them, the chances are they're not happy working for you. And so the sooner you can undo that, the better for everyone concerned.